Okay, good afternoon, everyone. My name is Owen. I'll be one of your presenters today from Advanta IRA. Thanks for joining us for the webinar. We're just going to give it a couple more minutes. I see people that are still filtering in, and then we will kick things off. So looking forward to it. Okay, we can go ahead and get started here. Thanks everyone for jumping on for our webinar this week. My name's Owen again, representing Advanta IRA today. I'm one of the business development executives here at Advanta IRA. I'm joined by Ellie and Brandon, and they're representing Stratus Financial. So we're going to be talking about investing into aviation debt with a self-directed IRA. So super excited to be speaking with them. This is a really interesting one. So I think you all should really enjoy it. So we'll go ahead and get the process in motion here. So just a little bit of background on me. Again, my name is Owen. I'm here at Advanta IRA. So I have over 10 years of experience in the financial services industry, working with different self-directed IRA providers, and also on the other side of the fence in professional managed money, like as a financial advisor at one point. But that's my QR code, so you can scan that if you have any specific questions for me, or if you want to set an appointment. And then my email and phone number is listed there as well. And then our speaker today is going to be Brandon Martini. So he is the CEO and co-founder at Stratus Financial. So Brandon spearheads strategic initiatives and oversees the day-to-day operations there. So he helps drive growth and ensure that everything is operating correctly. So today, basically, he's going to cover his role at the company and how they started the company from inception and what they do today as far as doing investments through the aviation industry. So he'll be speaking a little bit later about what that looks like. Just a quick disclaimer. So Advanta IRA and its employees do not provide investment advice or endorse any products. So all information and materials are for educational purposes only. All parties are encouraged to consult with their attorneys, accountants, financial advisors before entering any sort of an investment. So it's always important to do due diligence before you choose to invest with a self-directed IRA. And just a little bit of background for those who might be new, just covering what is a self-directed IRA. So in a nutshell, a self-directed IRA gives owners complete control over their retirement funds and investment decisions. So basically, you can invest into a wide array of alternative investments outside of the general stock market. Some of the main investments that we help our clients facilitate here at Advanta IRA include real estate, mortgages and notes, private placements, precious metals, cryptocurrency such as Bitcoin and Ethereum, syndications, and a whole wide array of other investments as well. So if there is a particular investment that you're looking at and you'd like to learn if you can do it in a self-directed IRA, be more than happy to answer that question for you, and you can reach out to us anytime on that. And then just a little bit of background on Advanta IRA, like who exactly we are here. So we're a self-directed IRA custodian and administrator. So we have over 20 years of experience, and our team here is comprised of attorneys, MBAs, and certified IRA services professionals designations. So most of our client account managers here carry the CISP designation. Advanta IRA is considered trusted, so we have clients all across the nation, and we currently facilitate over $3.8 billion in assets under administration under our roof. And then we also do work with a network of trusted CPAs and attorneys. So all of our professional resources are listed on our website as well if you're seeking out a new CPA or an attorney. And then Advanta IRA is secure. So basically what that means is that all uninvested cash in the IRA is held exclusively in FDIC insured institutions. So just like a major bank or another large broker dealer, your cash that is in the account here would fall under FDIC insurance. And then lastly, Advanta IRA is considered personal. So basically we're a little bit different. And at Advanta IRA, every client that comes through our door is assigned to a dedicated account manager. So they're going to provide concierge style service for your investment, funding the account, whatever exactly it is that you're looking to accomplish with the account. You'll have a dedicated person that you can reach out to help you basically with anything that you're looking to accomplish. And then this is about half of our dedicated account manager team here listed. So again, with us, we believe that service should be personal. So our clients are never routed through a call center. So each client is assigned to a dedicated account manager who becomes deeply familiar with you and also your account with us. And then this is our team at Advanta IRA. This picture was taken about 2 months ago. So we were first started in 2003. And Advanta IRA has expanded to a team of over 60 staff members as of the end of last year. So that's just kind of a brief overview on self-directed IRAs and Advanta IRA, who we are in the industry. With that, I'm going to hand it over to my friend Brandon here, and he's going to walk through some of the specifics on Stratus Financial. We're excited to have him today.
Thanks so much, Owen. Really appreciate it, and it's a pleasure to meet everybody that's watching or listening to us today. Like you said, my name is Brandon Martini. I'm the co-founder and co-CEO of Stratus Financial. We started off this journey back in COVID time in 2020. I had this problem with my flight school. I own 2 flight schools in Southern California. I grew them from 1 aircraft to 14 aircraft and kind of bootstrapped the whole thing. But as I grew, I had one large problem. Flight training's expensive, and people can't just afford it who didn't come from at least, I don't know, well off means. So how did we solve that problem? I reached out to one of my friends, who's also my co-founder, Anthony Gerasi. He owns a law firm in Southern California called Gerasi Law. And they specialized in private finance law, setting up funds, also raising capital, things of that nature. And I reached out to him and I said, hey, I need your help setting up an in-house funding program for Stratus. And he said, sure, I'm open to helping you with that. And he was also going to my school. I taught him how to fly. He's now a commercial multi-engine pilot and more. And he ended up coming up with a new idea for me. And he said, hey, we're not going to do your idea. We're going to do Stratus Financial. And as of today, we're in over 430 flight schools across North America, and it's been a fun journey. So I'll tell you a little bit about our team as well, as long as I can use this properly. There it is. There's Anthony's friendly face in the top left corner. I'm in the middle. Alon is our chief investment officer, Eljona, and of course Don, our general counsel. He also heads up part of our servicing department as well. Anthony and I are both certified commercial pilots. I have 4 airplane commercial pilot certificates. I also have all 3 flight instructor certificates as well, and accomplished pilot. I've got over 2,000 flight hours myself, and I've never worked for anybody in that industry except for myself. So it's been a fun journey in aviation. I also own a few airplanes, small ones that go very, very slow. So it's kind of fun. One's called an Icon A5. If anybody ever wants to see what it looks like, it's a really, really cool little airplane, and it lands on the water, and just kind of a fun thing to do. Actually, before I even get into the long-term outlook, I want to tell you a little bit more about me. Like I said, I started off when I was a kid. I wanted to become a pilot, like a lot of people do. They look up into the sky and they say, hey, I really want to go do that, and X, Y, and Z. I heard my grandfather when I was a kid talking about learning how to fly, and he never finished, but he used to do mission trips down to Mexico, and he'd deliver dentist equipment and chairs and things to needy people down there. So I always used to hear about that, and unfortunately my grandmother squashed that dream of his and said, you're not going to go fly because my grandson's going to want to do this. And my parents obviously didn't care, but my grandmother did, so she stopped it. In high school, I almost joined the military to fly because I thought that was the only option. And I also came from the perception that all pilots come from the military that go to the airlines. And though that was true in Vietnam era, that's not true today. It's actually probably the furthest thing from the truth today. People in the military are making more money than they ever have being a pilot, and they're making $20, $30, $40, $50,000 bonuses just to stay on as a pilot and for another 2 to 4 years. So it's really unbelievable, even becoming a pilot in the military, what's happening. By the way, I have a dog. His name is Maverick, a girlfriend named Nicole, and I also have a son named Austin. He'll be 15 in May, and that makes up my little happy family out here in Southern California. So with that being said, I'll get into what is really happening long term in our industry. Boeing puts out a report every year, and it's a 20-year report. Obviously, it says Boeing's long-term pilot and technician outlook. I would urge anybody to just do a Google search and type in Boeing pilot and technician outlook, and you can find the one that they put out in 2025. 2026 won't come out till later on this year. But as you can see, we need 660,000 brand new pilots over the next 20 years. There's quite a few pilots that are retiring. As we all know, pilots used to come from the military and come from certain wars, like I said with Vietnam in the past. Well, all those pilots are aging out because at 65 years old, you're no longer allowed to fly, for the airlines at least. And normally when people have careers that last, I don't know, 30 to 40 years, they're pretty much done with it. They're going to go do something else. And they're not going to continue flying in a job that they make, I don't know, 1/10 the money or 1/4 the money that they used to make. I'll get into pilot salaries that are absolutely crazy coming soon. If you haven't even seen some of the stuff that was on the internet as well as on the news in the past 2 months, somebody posted their pay stub, and it was something like $400,000 working for SkyWest or Southwest rather. And there's plenty of other ones you can find online as well that kind of show that part. Like I said, we need more pilots. There were early retirements during COVID that happened. People were forced out of being able to fly for almost a year. And then after that, they have to get retrained. When you go fly these large aircraft, you have currency requirements and also recency requirements. And currency and recency requirements kind of go hand in hand for safety and for regulatory reasons. So it took a long time for us to get pilots back in the cockpit. Actually, it didn't really get solved until kind of last year with the early retirement issue. So that one's almost solved as of today. But there's also a few other things. Like I said, the forced retirements at 65. People are aging out. Some people just want to go do a different career because they thought they liked this in their 20s and now they have a family and they want to go do something different. A lot of people go into real estate investing or investing into a fund similar to ours after they retire from being a pilot, or sometimes even in the middle of it, because they sometimes only work 20 to 40 hours a month and they make really, really high salaries. So there's also increasing global demand. I mentioned that report on the last slide from Boeing. The global pilot shortage is expanding. In the US, it's expanding, obviously, but think about in every other country that is not quite as developed as us. They all are having more and more needs for air travel. They want to get around. They want to go visit new places, and it's causing people to even leave the U.S. and go to other places. I can tell you this: if I didn't work here, I would go try to get a job at Emirates if I didn't have a family, of course, because they fly all over the world and they make pretty good money and they barely work. Those are some of the reasons why we have a global pilot shortage. Outside of that, I'll talk a little bit about our fund. Our fund is comprised. See, I can't speak already. It's only 9:14 p.m. Pacific time. Are comprised of really high quality borrowers and co-borrowers. Our average borrower and co-borrower FICO scores are 758. Number of percentage of borrowers who are qualified for a commercial pilot certificate, and what we call our graduation rate, because we track that internally, is 84%, which is really, really high. The average loan size is around 88,000. I think it's actually gone down a little bit since this slide was made. And our average co-borrowers, they kind of range on a month-to-month basis, somewhere between 79 and 85%. So we try to have the majority of our borrowers have co-borrowers. We've had over 4 years of track record. Like I said, we started in 2020. We really got our legs in 2021. So we're really about 5 years now. We've done actually $99 million of new loan origination since inception. And I think we've crossed over like 1.5 billion in applications. It might even be higher than that. It could be like 2 billion. I stopped tracking that as soon as we hit 500 million a while back. And it was just an amazing metric to see the demand that we're getting. Our performance rate, that includes defaults, it also includes loan modifications, et cetera. Our default rate's somewhere around 10%, and our borrowers obviously kind of the super prime borrowers with a 758 FICO score. When talking about this may be our fund profile, but I'll tell you a little bit about how we underwrite our borrowers. Because at Stratus, what we do is we underwrite our borrowers and we underwrite our flight schools, which I'll get into the flight schools in a little bit. But on the borrower side, we look at a few different metrics. We want to look at their income, their FICO, and this is something that most people don't look at, but people in hard money do, and that's kind of where Anthony's background came from. And it's looking at assets available by the borrower. So does the borrower have any assets? Now, although we're not attaching to their assets because otherwise they can just go get a second mortgage on their home, which actually they can still do, but they typically don't want to do that for their kids for some reason. So they'll just co-sign on this. But we'll look at those assets, and so we know where we can go after them. For example, we did a test with about 20 defaulted borrowers that we knew they had assets in non-homestead states. We went after those borrowers very aggressively, and we ended up either settling or receiving 83 cents on the dollar as a recovery rate from just those 20 initial borrowers. We have another, I think, 30 in the pipeline right now that we started just a few months ago. Those typically take about a year to run through the system. So we'll see how those turn out, but we anticipate similar results, possibly even better. So I kind of told the story about Stratus. I also told you the solution and some of the facets that we work in. We are strictly lending to flight school students that want to go to flight school. They have to be enrolled to be at least a commercial pilot. It's a high yielding debt fund. We pay 16 to 19% based on various factors that I'll get into later on at the end. And we have never missed a monthly payment to our investors. I believe our track record's approaching 5 years. So it's really been a great track record. It's also uncorrelated to some of the greater markets. So if you want to be diversified, it's also a great fund to be diversified, especially what we're seeing in the commercial real estate markets. So how do we do this? We have our own skin in the game. I think it's $750,000 or $800,000 in the fund right now. It used to be lower. That's why I don't know what it is today. It used to be like 450, but I've put more money over the years into that. I know my business partner and co-founder Anthony's got nearly $1 million, and we have another larger principal. His name is Chris, and he's at somewhere around 18% of the company at this point, and he has somewhere around $1 million as well into the fund. So that's over 10% of just our money in the fund totals right now. Our fund is approaching almost $28 million today in the fund. We raised about half of that last year alone, as we've gotten a great track record to kind of prove out our models and getting platforms like this to speak on with some background. The investors get the preferred return. So what that really means is we pay you first and we pay us second as the manager. So if there's a waterfall after that, additional interest was made, then we get that as a distribution as the management fee. And that's on a monthly basis. We do that monthly. And that's how our fund pays our manager, which is OpCo. So I was talking a little bit about underwriting process earlier regarding how we look at these borrowers. We look at them in more of a holistic perspective. We actually have an 86-page underwriting manual. At least that's what it was last time I really looked in depth at it. It might be a little bigger by now. Where we look at the borrower and we look at the co-borrower. We also look at those three pillars that I was talking about. But outside of all of that, we actually partner with flight schools across North America. Um, as of 2020, I used to say that there's over 2,000 flight schools in North America. I think there's actually closer to 4,000 today. That includes little small mom and pop places with one aircraft and one flight instructor, all the way up to the large schools that have 90 to 100 locations across the U.S. And are able to work in all 50 states and some U.S. territories. We underwrite each one of these flight schools to ensure that they have really a good school, and we also re-underwrite them. I think our underwriting manual for schools is over 50 pages at this point. We really want to make sure that they have the ability to get these students through programs. So just one of the basic criteria is, do you have 3 aircraft? That really breaks this down from, okay, this is a little hobby business, to, okay, now I actually need to make a little bit of money to either pay for these 3 aircraft that I purchased, which can be the same price as a house each, or sometimes more than that, and be able to run this without losing a lot of money. So we look at some different metrics besides just, hey, are they profitable or not? Because a lot of these flight schools, they use it as kind of a secondary business compared to whatever their primary is. So we look at how many full-time flight instructors do they have, how many aircraft do they have is a big one, and also what kind of aircraft do they have? Do they have what's called a TAA, or a complex aircraft? Do they have multi-engine aircraft? These are all types of aircraft that are required by the FAA and the regulations to ensure that we can get a pilot to go from 0 all the way up to a commercial pilot certificate. And if they have 10 aircraft but they don't have a complex or TAA, we won't approve their flight school. So those are some things that we look at. We also run checks on all their aircraft to make sure that they either have a lease in place with whoever they have a lease with, if they've purchased it, or they own it outright. And we do that by looking up the FAA records by tail numbers. So we want to make sure that they have that. So like I said, we'll partner with those schools. We'll underwrite the borrowers and obviously the schools prior, and then we'll get out to funding that loan. We can typically, the fastest we've ever underwrote a borrower is 1 day. It used to be as long as 45 days in our early days, but our computer systems that we've invested in over the past year and a half have really made it so the borrower is never waiting on us. We're just waiting on them to verify their documentation. One other thing you'll notice on here, on the left side, the 4th item down on the underwriting process, where it says borrower, we want to make sure that they have either a first or second class medical. And you say, why is this important, Brandon? It's important because if you don't have a first or second class medical, you can never go get a job as a commercial pilot. It's a little bit more complicated if you're a flight instructor, because you get paid to teach and not to fly. But if you want to go work for an airline, or you want to go work for a pipeline patrol, or one of the 100 type of starter jobs that you can get in this industry, a first or class medical is very, very important, because it's necessary for you to be able to go fly for somebody. I have a first class medical, and it's not very hard to get. As you get older, they're a little bit more difficult, but in general, not really. They do an EKG on you. I can kind of skip through this, but I'll kind of touch on a few little things. I let you know some of the underwriting context that we need for our flight schools. Outside of that, like I said, we do a multi-stage underwriting. We also re-underwrite the schools. We do a 12-month re-underwriting. We also do the 6-month re-underwriting. We really want to make sure these schools are staying in line. One thing I didn't mention is we want to verify that the student uses a syllabi that's approved by us. Some of the general syllabi that are out there are GLIME or Jeppesen, et cetera. Those are okay because the FAA has already vetted them, so we've just given them our stamp of approval. Plus, I've looked at them when I own my flight schools for several years. I know exactly how those are underwritten, and I approved those back in the day. Some schools have their own syllabi. And when our head of flight school relations, who's also a pilot, can't decipher it or ask questions, he'll defer to me at the end of the day. But there's not many schools that have their own syllabi. They usually use a commercially based one. Outside of that, we also have on-site visits. We'll visit our flight schools from time to time. We don't do all of them all the time. Visiting 400 schools, or 426 or whatever we're at today, plus all of their other locations. I think it would equate to over 500 visits. That would be more than one a day over the entire year. We obviously can't do that. So we spot check them, obviously. We also created a conference called Aero Summit. I would encourage anybody to go check it out. It's called stratusaerosummit.com. We had our inaugural summit in Las Vegas last year at the Wynn Hotel and Casino. It was fantastic. We had 350 attendees for our very first event, which is on par with some of the largest events in our space already today. This year, we're hoping to have over 500 attendees at our second event in just outside of Miami in Advanta, Florida. And that's going to be in mid to late May. I can't remember the exact dates off the top of my head. But we're also having a golf tournament there. So if anybody wants to join, come on down. You can meet me. I'm hosting that. It's a big passion project of mine. So please come on down. Current salary projections. The median, not the average, but the average pilot's making $226,000 a year. 50% of pilots make more than that. There are also pilots making more than over $700,000 a year. When you look at how much money a pilot actually makes, and this is what I was referring to earlier, doctors make more money in the beginning, but pilots make more money long term, and they also work a lot less. I know whenever I go to my doctor's office, they're there all day long. They're seeing patients every 15 or 30 minutes or whatever it is, and they're always running late. Pilots, you can argue they're always running late too because our planes keep on getting delayed, but it's normally not the crew's fault. It's normally the airline's fault or the airplane's fault, etc. Pilots are typically on time. But they're also working in the beginning of their careers. They're working maybe 15 to 20 hours a week. Maybe 10 hours of that is on-call time that they can do other things and better themselves. At the end of their careers, they're working that same amount of time, maybe in a month, because they can do what's called bidding, and they bid for the highest dollar jobs because they have the most seniority. And they can also say, hey, I don't want to do certain things. I only want to take these certain flights. And they can fill up their entire schedules with the most profitable flights that they can do. And over their years as a pilot, they can really learn how to do that, which is fantastic. So I've actually seen several other slides besides this, not in my deck, but other decks that show exactly how much more a pilot will make than a doctor, which is mind-blowing to me because I always thought doctors made the most money. Now I'm starting to think that is not entirely true. Our loan application rates have continuously gone up. I would say over the past year, they kind of flattened out compared to years past in the beginning of the year. So maybe late 2024 to early 2025, they were kind of flat. And I've been trying to look at a correlative factor for that. And to be honest, I can't find one. But since the end of summer, we're starting to see things go up. The only kind of correlative factor that I could think is uncertainty in the markets. With a new president coming on board, things like that. I have a feeling that kind of played a role in things, and that usually does every 4 years. No matter who the president is, there's uncertainty of what's going to happen, or sometimes people have perceived certainty of what will happen. So since that's kind of gone away, we're starting to see that trajectory go up even further. But as you can see from this graph, the trajectory of our applications has been continuously going up pretty much year after year after year. We're expecting the same thing in 2026. We already saw that 2026 was about 10% higher than 2025 in January last year. So that's a really good side. I said that we've worked with a lot of flight schools across North America. We work with really, really large ones with locations all over. This slide was created probably about a year ago. So it's actually grown massively since then. We ended up with about 99 million total loan originations via 2025 at the end of the year. We work with large schools with airline affiliations. Academy of Aviation. L3 Harris is now by a different name. They converted last year. U.S. Aviation Academy. We also work with a school called ATP, which is by far the largest flight school in the world. They keep on adding locations. The last time I checked was, I think, 86 locations across the U.S. Each location has usually more than 3 aircraft, and some have on-base facilities for maintenance. So we work with every large flight school in North America. I can't think of any that we do not work with. There might be one or two, but not really. There are also schools that are not affiliated typically with like collegiate programs. So we don't typically lend to collegiate programs, although we're looking at that because there are some gap fundings for collegiate programs. The reason why we really have a foothold in this industry is with collegiate programs, they have access to different funding, right? You can go get a loan and it's backed by the federal government, and that's why you can go get 5% interest rates on a public student loan. Private student loans, they have to be much higher than that for them to make fiscal sense, and that way we can cover our default, et cetera. All right, so we have some loss mitigation processes that we also enact. I already mentioned one where we go after those borrowers very, very aggressively, but this is kind of how it starts. We give them a funding suspension notice, which means we tell the school, hey, pause all flight training with the money we've sent, because we send it in tranches. We don't send it in one lump sum. There were some banks that had some really major losses like 30 years ago because they would send schools $100,000 at a time. And I'll tell you this, if I send a school like for 30 students, I send them $3 million at once, I know exactly what they're going to go do with that money. They're not going to be a good steward and put it in a bank account and make sure it collects 5% interest and draw it every month like they should do. What they're really going to do is they're going to go take that money and they're going to go buy brand new airplanes and go lever that money even worse. Well, most likely lever it, so it's even worse. They're probably going to take $10 million in debt out for that $3 million rather than putting it in an escrow account. Well, when things start slowing down, that domino effect happens and their business goes out of business. So I've read about those things that happened prior to me getting into this industry in 2013, 2014 time. And I wanted to make sure that would never happen. So we actually step fund these borrowers in tranches. So in the beginning, you have a lot of books and supplies and things you have to buy, so that's front loaded. But then we only pay you up to about 50 flight hours. After that, we give them anywhere from 4 to 7 different tranches that the the flight schools have to request on behalf of the borrower, and it's all based on flight training progression. So, for example, if a student's in Ellie's world in New York and it's snowing all the time and very, very cold, and you can't go fly, then you're not going to be requesting funding because you're not actually flying. But if you're somewhere like me in Southern California, where the weather is generally good, or in Florida, or in Texas, or Arizona, which is a very big hotspot for flight training as well, you will likely see you'll see more training requests and funding notices sent over to us. But like I said, on the loss mitigation process, that money that we do send them at a time, if the borrower is late, we'll tell them to stop funding. And this happens after they're 3 days late. We say, hey, pause their training immediately. We're not going to spend another penny on them until they get back in good graces. And sometimes they get behind by a week or something and their training's paused. If they get back within the 30 days, we have no problems. Past that, we'll send a notice to stop funding, and we'll ask for that money back from the school. So that's another part of the loss mitigation process. So we'll actually tell the school to send back, say there's $10,000 of unused funding in their account. We want them to send that money back to Stratus, and we'll pay down the principal portion of their loan in that manner. So we obviously communicate them via phone, SMS, email, and we keep massive records of this. As of today, we do all of our loss mitigation in-house. We also do all of our servicing in-house by our partner company, but it's wholly owned by the partners of Stratus. It's called Prestige Servicing. But we're hopefully going to transfer that out to a third-party servicer in the future. We want to be focused on origination, and we would love somebody else to be focused on helping us go and collect these payments from the borrowers as they become late or in default. So we also charge some late fees and just kind of standard things like that. How do we correlate with other asset classes? And we've had a really good cumulative log record. So if we look at the cumulative log over any of the other asset classes in the past year or so, like I said, I think this might be a few months old. it's hard to get these numbers every month and update it every single time. But we've seen the cumulative returns kind of go up exponentially just on for Stratus compared to others, right? I know there's a few outliers on there. I know that crypto's gone up, but I looked at crypto this morning and it went down to 66,000. So they lost 50% in the past 6 months. But we've also looked at things like gold and silver, which keeps on going up and up and up. So there are a few other things that are diversified and also good investments. I'll tell you this: I have a lot of money in my Stratus fund, but I also have a lot of money in precious metals. That's my personal opinion, just because I've also seen that go up, just like you're seeing in these results. But this is kind of how we are compared to other commodities or large cap stocks like the S&P 500. And I know somebody had a question on this that we were going to get to later on, but this is really a good slide to kind of go over why you would look at a different investment besides it not being really correlated to the stock markets. Just something to get yourself diversified. Especially finance. PIMCO said this is a $20 trillion market. It's the next frontier of private credit. I know everybody's heard that buzzword, private credit, all over the internet. And that's what we are. We are a private credit fund. This was an institutional class asset that was not available to normal investors at all. Before, you would have your investments get sent out to large institutional investors, and they would pay you whatever your rate was that they've kind of negotiated or seen what they can do, because they diversify so much with losses, and they kept these, I don't know, I'm going to call them cash cows, to themselves. And now today you have the ability to get into an institutional asset class similar to Stratus, which is private credit. We've done a few press releases, 2024, 2025. We're probably going to do another one in 2026 as we approach $3 million in money paid to our investors in our fund, which I believe is coming fairly soon. And I believe we're also going to get to about 30 million in the next month, which will be another press release that we'll share via Business Wire on our fund. Outside of that, in 24 and 25, we had a couple major press releases, and I'll explain why these are significant. One we did with Monticello Capital Partners. It was a forward flow warehouse hybrid facility that we did with them, which is a fancy word for a line of credit, if you're curious. And that was up to $50 million, but it was very expensive capital. So we're not sure how much of that we're actually going to use. We're under 20 million at this current time of using that entire facility, but there's a likelihood that we will expand. Outside of that, we did get last, I think it was February or March, we closed on a $30 million line of credit or our large warehouse facility with an asset manager up in New York, and they're a fantastic partner, and they're about 5% less than that Monticello facility. So we're really thrilled to bring them on. We've already have them up to over 20 million at this point, and we're starting to grow and look at alternatives to after we get past that 30 million, which they're already letting us know that they're willing to expand with for our expansion of our company as well. Outside of that, we ranked 113 on the Inc. 5000 last year, fastest growing companies in America. We also got the fastest growing company in Orange County, which is where our office is based in Southern California. 3 years in a row. First 2 years was the fastest growing small business company in Orange County. And then last year was the fastest growing mid-sized company in California, with our revenue hitting around $15 million last year, which was fantastic. The next slide, I want to introduce Ellie, who you've seen her beautiful face on here for the past 30 or so minutes as I've been talking. And I'll let her kind of tell you a little about her. She is our head of investor relations, and she would be our main contact with our fund. Ellie, if you want to tell a little bit about yourself and who you are and what you do here at Stratus.
Yes. Thank you so much, Brandon. Thanks, everyone, for joining. My name is Eljona Shkreli. I go by Ellie. It's just easier that way. I'm currently located in New York, probably battling last 20 years. I haven't seen a winter like that, like today. But yeah, I live in New York with my family, my beautiful 2 boys, and been with Stratus for over a year and a half now. Time flew by, having fun. Prior to that, I have an extensive background, just like Owen, and financial services, worked for the major big banks here in Wall Street City, JP Morgan. I am the main point of contact for all prospects like yourself that you've joined today, or current investors. Anything that's related to the fund, questions, terms, feel free to contact me. I have the email here, and also my phone number. I love connecting with each and every one of you, kind of hearing what your dreams are, what your passions are, and what keeps you up at night. For us here at Stratus, we strive to do what's right for you. Whatever makes sense for you, we're always there for you. So I look forward to connecting with each and every one. And also thank you, Owen, for having us today on this webinar.
Yes, thanks, Owen. And also, there's always a disclaimer in here, just as Owen had on his own side. So you can read through this at your availability. This will also be sent out in our PPM should you be interested in this. We are open to only accredited investors, as most of you should know. So looking forward to working with you. And Owen, I think the next slides are yours, and I'll let you take it back away. Thank you so much.
So yeah, appreciate all the background there, Brandon and Ellie. Some really exciting statistics, specifically with Stratus being on the Inc. 5000 list, and just like the momentous growth that you guys have had over the last several years. It really just goes to show the company and what you're building there. And it's something that the investors I've talked to have been really excited about. So thank you for coming on today again. So we'll go ahead and wrap things up here. I'm going to cover some additional slides, and then we can open it up for Q&A. We did have some writing questions as well that Brandon is going to cover there. So we'll touch on those. But basically for self-directed IRAs, we offer a wide variety of different account types. So this would include like your traditional Roth, SEP IRA, SEP Roth IRA, those are small business plans. Simple IRA, solo 401k plan, those are also small business plans. And then we offer the CISA, so covered all education savings account, and then the HSA health savings account, which I'm sure many of the audience is familiar with. The HSA is being offered through your workplace, but all of the updated contribution limits are listed here. So basically for the traditional and Roth, again, you have the 7,500 maximum contribution limit. It kicks up if you're over the age of 50. The SEP IRA and solo 401k, that's where you can really put away a lot more money every year. So you have that $72,000 contribution limit. So it's a much higher than a standard IRA is. And then you have the covered education savings account. Again, this is for minors under the age of 18, so it's $2,000 per child. And then the HSA account would be $4,400 per individual. If you're over the age of 55, that does kick up as well. So just a little bit of background on that. And then just like the presentation you saw today with the Advanced IRA, we do offer a wide range of other platforms here as well. So we have our events and webinars. So we do hold those every Tuesday and Thursday. We do also offer a monthly virtual networking webinar. It's called PPP, so that stands for Pitch, Promote, Prosper. So that's a webinar that you all can jump onto. So it's basically going to be different investment providers talking about different investments that they offer. And then if you want to connect with other clients, or you're looking to buy a home or sell a home, or you're looking to engage in a private lending transaction, that's really the community where you can all come together. So we do hold that once a month. Again, it's called PPP. And then we do have our weekly podcast. It's called the Alternative Investing Advantage Podcast. So that features a new guest speaker every week as well. So that is something that you can look up on like Apple Podcasts, Spotify, Pandora. It's available through all the major outlets. And then we do regular posts online. So that's going to include weekly articles, up-to-date information that's relevant. So we try to update like new, current, and changing laws that affect self-directed IRAs and stuff of that nature. You can find that all on our website as well there. And then just a brief primer on the three-step process. Pretty straightforward. If you're looking to place a private investment, the three-step process would be: step one is you can establish the self-directed IRA, and then you can start the transfer or the rollover process at that point in time. So once the account is fully funded, we can then proceed to the investment. So for step two, placing the investment. Again, this is where your account manager will come in. They're going to handle the majority of that paperwork and make life easy, but if you are looking to engage in a private investment, basically you would fill out that paperwork, and then it would be submitted to Advanta IRA for us to approve and then send that money out the door. And that takes us to step 3. The transaction is completed, and then we send that money out the door to complete your investment, and now it's held in the self-directed IRA. So that is the general process there. And then this is Brandon's information here. That QR code, you can scan that or take a screenshot or a picture if you would like. That goes directly to their website at Stratus Financial, so you can learn a little bit more about them, and you can learn a little bit more about their fund. And we will also pass out this deck as well at the end. So all the participants on today's webinar will receive that, and then the folks that couldn't make it, that watch the rewatch, we will also send that out the door as well. So please make sure to send out that information. And then my information is at the top, so my email, phone number. If you have any questions for me, I'm always a point of contact, so feel free to reach out to me at any time. And then we did have some writing questions as well. So these are going to be more for you, Brandon, but these are the writing questions I was telling you about. So we'll just go down the line, kind of answer these for the audience live here. But the first question, pretty easy one. But question 1 is, why would I invest in a private company such as Stratus Financial over the stock market?
Yeah, absolutely. Perfect. Like I was saying earlier in my presentation on some of the different asset classes that we do not correlate to. That's why you should look at a private company over the stock market. There's different types of funds that a lot of us invest in currently, real estate funds, energy funds. This is just a private credit fund that's a little bit different, uncorrelated to the stock market. I also want to mention that you can also reach me if you have some questions in general. My email is brandon@stratus.finance, and also probably the best way to kind of keep track of what's going on in my life. And also Ellie is finding us both on LinkedIn. I'm the best looking Brandon Martini on LinkedIn, so just look for me. I'm also the only one, so just go ahead and click that on the top. And Ellie is, of course, Ellie. You can find her on LinkedIn as well. She has a great following and puts a lot of amazing insights into the markets in there as well. Question number 2, what kind of time horizon should retirement investors expect when investing in Stratus? Stratus pays out monthly. So if you invest $1 million today, you're going to start getting your return every single month starting the following month. It's really about 45 to 60 days after you initially put in the money, just because of timing on payments and different things from borrowers. But it's essentially right away. It's kind of the following month, just kind of depends on the timing. We do have a 2-year lockup on that. I'm just going to kind of expound on this. The 2-year lockup is because we're expecting to sell off these loans or get payoffs. That's the way that we get you out of the investment if you want to get out after that. We're also trying to do our first securitization. There's already been 2 or 3. I don't know if the third one's successful or not because they had low income producing assets on it. So at least 2 private securitizations that have happened in our industry in the past. So we know it's possible. And that's our planned takeout for everybody. Question number 3, how do payments come back into my IRA? Like I said, we pay them monthly. You can either reinvest your payments, or we can pay them back directly to your IRA. Question number 4, what questions should investors be asking Stratus Financial before investing? And I'm actually going to dovetail that to some of the unanswered questions that are going in the Q&A, if you're okay with that, Owen.
Yep, go for it.
Awesome. Ronald, thank you so much for the question. We're paying 16% on people that are investing between 50 and 250,000. 16%, 16% is the first go around. 17% on 250 to 500. 18% to investors that have 500 to 1.5, and 19% on investors that have 1.5 or more in our fund. If you invest 499,000 today, and next month you put in 2,000, you automatically get bumped up for the following month. Is how we're doing it. How much are we charging the students? We're charging the students anywhere from 13 to 23%. I would say the average borrower is like 17.5 to 18%. And how can we do this? So we charge all of our borrowers a flat fee that's between 10 and 19% fee that goes to 2 different things. We have 5 to 7 different loan products that we give the borrowers options to choose. One is a deferred product. where they have 1 year deferred interest followed by 1 year of interest only, followed by 13 years of fully AM for a total 15-year product. You're wondering, why would we charge the borrowers that much in fees? And I'll tell you the reason why. Our investors like to get paid right away. You guys want to get paid right away, and so do our banks. We have not found a bank that will let us warehouse the money and accrue interest for a long-term payoff yet. Have we been searching for that for 6 years? Yes, we have. The way that that's taken care of is with the federal government. They're the ones who kind of make that work in federally subsidized loans, but it's really hard to do it when you're doing it on private student loans. So that's why we have to charge that fee. That's how we're paying that interest in the first year. It's also how OPCO makes money. Outside of that, we are charging interest on the total committed dollar amount that we've committed to these borrowers. So if we commit $100,000 to the borrowers, then we're charging them, let's say, that 17% interest on that 100,000. That means they'll accrue $17,000 in the first year, although we may only have $40,000 out. So I'm just doing math off the top of my head. That would equate to somewhere around 35% or so. That would be an effective interest rate on year one if they only took 40,000. Most of our borrowers get fully funded within 18 months. Some get funded as little as 7 months, depending on the flight school and if they already had hours prior, things like that. So they differ. But when you look at our total product range, our first year, we actually make somewhere in the 28% range. Second year, it goes down to the low to mid 20s. Third year on, it goes to the high teens, and that's for a combination of reasons. But that's how we are actually making money on that. And I want to jump into to Larry's question after that. It kind of dovetails on to the one that we just did. And first off, I would be really interested to talk with you. I don't know if everybody can see his question on here, but it says he's been in aviation for 50 years. He's an ATP rated pilot, which I'm hoping to get this year, by the way. I have all my hours. I just need to go take the check ride. And he's also a CFII, which means he's an instrument rated instructor. He has his A&P IA, which is inspection authorization, and he can work on airplanes and sign them off. And he's worked for a lot of different airlines, whether they're large commercial airlines like we would all think about, or smaller ones called 135. So it's fantastic that you're on here. It also says a lot. If you are on this webinar, it means that you've made a lot of money in aviation, although you've even said on here that you've seen a lot of ups and downs in the industry, as we have. But the fact that you are on here says a lot, says that you've probably made a decent amount of money in your 50 years. So I'm happy you're here. But you did ask a few really, really good questions on this. Understand the loan to a potential pilot by paying flight school for training as a pilot progresses. Is this unsecured? The answer is yes, it is unsecured debt. So just like there's pools of credit card debt out there, there's pools of loans like this. So the difference when people go and invest in a house, per se, or maybe 3 or 4 houses in a fund, if one of those houses goes bad in that fund, out of, let's just use 4, your deal is materially changed, right? When we're doing this, we have a pool of over 1,000 loans. I think we're up to 1,150 or something as of last week. So we have to have a really, really large amount of these loans all default all at the same time for us to have a material issue on this, right? So it's not like, I'd like to correlate it with that real estate, because if you have a one real estate deal that goes bad because you've got renters in there and they refuse to get out and they go thrash your house after they keep you in court for 6 months or 2 years or whatever it might be, or you have another COVID type of event, these are all causing issues for that housing market, obviously. So yes, it is unsecured per se, but like I said earlier in our presentation, we are identifying assets mostly by the co-borrowers that come on, and if they do have assets, we're giving them a percentage that we're attributing to those assets. So for example, if they have a $200,000 house and their mortgage is $100,000, they have $100,000 in equity, we're going to give them 30% of that as part of our scoring model. So we know even if their house goes down in value, we can still probably recoup a good amount of our money from suing them and going after it. Outside of that, Is the pilot making payments as they go, but they have no income yet, and you're paying us 19%. So like I said, on the one option where they have a deferred product, they pay $25 a month. All the other products we have 1 to 2 years deferred, interest only, followed by fully am. They range from 10 to 15-year notes. These borrowers themselves sometimes are making the payments. A lot of the time, their co-borrowers are making it, which is similar to their parents, right? And that's how we're paying you. I also mentioned in the last question on how we lever that money, so we can pay you your returns and also pay our banks their returns. We pair your money with our banks to get a full 100% advance rate, of course. Outside of that, there was a question: is this usurious? Is this too high of rates? We lend in about 38 states and U.S. territories currently. I know that number goes up and down every once in a while, so I can't be 100% quoted, but it's somewhere around that number. We've been looked at by like 4 different law firms that are really, really big in Wall Street. All of them have told us we're not usurious. We've also had complaints to CFPB because people like to use that word when they don't want to pay their bills. All of them have been dismissed. We have never had a action bestowed upon us at all. So no, we're not usurious whatsoever. We're doing everything by the book. And it's the way that we get our investors to pay our investors money. If anybody on here wants to make less money on their investment, I'm more than happy to create a new fund and we can charge the pilots less. But until I can find banks that will do that, which, by the way, we are really, really close. I have 3 banks right now that want to come in a senior piece, and they're willing to give us a SOFR plus 400, which is less than 10% money. And when we average that out, we're hoping to be able to give our borrowers rates similar to 13% and still maintain our investors, which would be you, their preferred interest at the same exact rates, because the blending would work out perfectly. So there's some ways that we are working towards getting our rates lower in the future. And I know we're running low on time, so I'm going to rush through this really quick. Why wouldn't the borrower borrow money from his or her family at much lower rates? Because most people don't have $100,000 sitting around or $85,000 sitting around. That's the reason why we have an asset. What the parent should do is they should take a second mortgage on their house if they own an asset and use that for school. Why wouldn't somebody like that go to their parents or family to borrow? If their parents have a house and they've got equity in their home, they should do that. They should not be going to us and getting that loan. They should get a second mortgage on their house. The problem is parents typically look at that as their nest egg, and they don't look at co-signing on the loan as part of their nest egg. So they're unwilling to go through those things. Before Stratus, really, that was the only way. Most schools would advertise deals that they would have with refinances on homes to do that, or they would encourage them to put it on a credit card and pay it off over time. 2 problems with that. Credit cards charge 30% interest, which is double what we're charging. And also, most people don't have $85,000 in available credit, so it's going to take a lot longer to pay that off. As you would know, Larry, and everybody else on here, as you get towards the end of your career, you're making a lot more money per year because you have seniority and you're probably getting better trips. So even if we go with some of the average, it's $225,000 a year. If it takes you 4 or 5 years of paying as you go, you're missing out on about $1 million in lifetime income just by doing that. So I know there's a handful. I don't know if I'm seeing all the questions, but there's a few other things. Owen, if you want to kind of address them, or we can answer them offline. Up to you.
I can address just 2 short ones here. I see on top. What's the minimum investment? That's $50,000. Again, you must be a accredited investor, and then we pay by tier, as Brandon mentioned prior. As the more you invest, the higher you get paid. And then there is another question regarding our 1099. We do supply all investors at the end of the year with a K1. And regarding the UTA, I would always suggest our investors to consult with a CPA. We do, as you know, that's why we're on this chat. We do accept self-directed IRAs. However, we always advise you talk with your accountant for tax purposes at the end.
Yeah, and I'll address the last question before I guess we'll go over in about maybe 30 seconds long. Competition. We don't really have any competition. we had some competition for somebody who wanted to try to be really cheap in the marketplace. And their idea was, hey, make these loans on their balance sheet, use private equity money, take the loans, make 7 to 8% loans, get a really large pool, and then sell it to securitization markets. They figured that they could sell these loans to those markets at those low rates with 20-year terms. I'll tell you, nobody wanted them because they were unsecured. They didn't want them at all. They wanted higher rate returns that they can get from other deals. They're getting that right now, and shorter duration, especially, is really what the big markets want. So they weren't able to sell that. So that one competitor that we had for about 1.5 years, 2 years, they went out of business because they couldn't make loans at those rates and sell them at those rates. It was just not possible. There's another one called Climb Credit. They work with maybe 15 schools across North America. They're not focused on pilot loans. We are. They're focused on coding boot camps and other lower dollar amount loans. So they're not really somebody who would consider a competitor. Sallie Mae is also in our market. They've been in our market for about 30 years now. They only work with around 25 to 30 flight schools in North America, and that's it. They focus on collegiate programs, as everybody knows, and they only work with a few schools that are very similar to a collegiate program. So Sallie Mae would be the other one. And we work with the majority that Sallie Mae does not work with, and also several that Sallie Mae does. Just like that one I was talking about earlier, it's called ATP. Also, United Aviate Academy, which is owned by United Airlines. They both have Sallie Mae, and they have us as a second lender. So I would say that's probably our only competition. And I think we hammered out all the questions. Only went over by 2 minutes, Owen. That's a win in my book.
Yep. Yeah, no, that's totally, we can run over sometimes too, so no problem. But just want to thank everybody for coming. Again, this was a really interesting one, and I was really looking forward for Stratus jumping on. So if you do have any questions for us, feel free to reach out to myself or Ellie. We will send out the deck as well from today's presentation, but we're totally available in the background if you have any additional questions. So with that, if there are no other questions that are going to go into the Q&A, we can go ahead and wrap up today. But again, thank you very much, Ellie and Brandon, for coming. That was a great presentation, and I learned a lot about pilots that I never knew. I didn't know they could like bid on the certain flights that they're going to take through their job, and like other small details like that. I didn't know that was a thing actually. So just a lot of great background information.
Yeah, thanks again, Owen, for having us. I only told 10% of what I know, if that. So happy to do another one of these sometime. And if anybody's interested in learning more about aviation stuff, I also have a podcast called Aviation Mentors. It's meant for student pilots in general. So if you happen to be on here and you're a student pilot or you know one, please have them go on there. It's free, and it's something, just another data point for you to see as you're looking at this investment opportunity. So Owen, thank you for having us on. It's a pleasure to talk with everyone today, and thank you for your thoughtful questions. We really appreciate it.
Thank you.
Yep.
Goodbye, everybody.
Thank you. We're going to go and close out the session, but everybody, hope you have a great rest of your day.